Would have thought Bitcoin would be the quieter of the indices when or the assets when you look at stocks and crypto. But I think again what you have is the hopium of the ETF, the spot ETF from BlackRock. You have potential for big money to come in, which is kind of keeping buyers setting up here. But the other side of the coin is that you haven't seen Bitcoin rallying with all these technology stocks, which in 2021 it did. If you saw Nvidia up 5%, Bitcoin would be up 10% on that day. So that's a concern to me, and I continue to be watching this 30,000 to 31,000 level, which we've been stuck in now for a month. If we are able to break above 31 and hold, I think we go to 35 at least. But if we break below and hold 30,000, there's a quick drop to 26,000 to 27,000 on the horizon. In the worst case scenario for me, Bitcoin goes to 12,000, maybe 9,000. The only way that happens is if you do see a major drop in the stock market where you see a run from risk assets. So if let's say the NASDAQ were to go back to October lows or lower over the next 12 months, to me, that would be a likely scenario where asset or money would be running from Bitcoin as well, and you could see those lows. Otherwise, I think if we just kind of go steady and just chop around here in the stock market, Bitcoin likely holds above 20,000 and eventually breaks higher due to the fact that big money will come in when that spot ETF is approved.
One of the things I was just going to mention here, and this is just something I was kind of analyzing today, is that it does appear that there's a inverse relationship now between the bank stocks and Bitcoin. And so what we know is that back when we had the banking crisis in I think it was April, when Bitcoin initially popped to about 31,000, that was when we saw Silicon Valley Bank failing and some of these other banks under a lot of pressure. And it seems like now that the banks are starting, like today we saw a big rally in the bank stocks and Bitcoin was down. And so there's this coordination or inverse relationship between the banks doing better, which builds confidence in the monetary system and having your money in the bank, versus if the banks struggle, people say, oh, the banks aren't trusted here, they could go out of business. Let me move my money into cryptocurrency or into Bitcoin. So just like a little bit of an interesting aspect to kind of think about going forward, where you have to start watching the banks. And if the banks really start to struggle, I do think it becomes a big money flow position to Bitcoin.
I just keep seeing stuff that makes me really bullish on Coinbase stock. Do you have any thoughts on Coin?
Yeah, I mean, it's had a big run recently, which makes it really tough to chase at this point. So I think, just looking at the chart in June, and this is really just, a month and basically a month ago, Coinbase was trading at $47. It's now at $104. So it's well up over 100%. So as a technician or as a trader, you would never want to chase it up here. But on pullbacks, I can understand the concept here where, if a Bitcoin ETF does get approved, and I'm sure it will at some point with the spot, then does it become a more intriguing play? So I do think that on pullbacks, this is something you watch for. I have a couple key trend lines where if we pulled back to, let's say, anywhere between $70 and $80, that would be a very interesting technical support for it. Now, just one thing about that. So to me, that's a more shorter term, maybe 3 month, 6 month, 12-month type trade on Coinbase. The longer term, like if you're asking me 5 to 10 years out, I think the amount of fees that these exchanges can charge on transactions are going to get smoked. Like again, if you look at the progression, when I started, and this is dating myself back, but when I started trading in '99 online, it was like the beginning of online trading. I think I was paying $30 to buy a stock and $30 to sell a stock. Then it went to 15, then it went to 10, then it went to 5. Now you trade stocks for free and there's no cost at all.
Small ebook, big impact, the wealth tree. The only 4 ways that will make you financially free forever. Download it here for free.
Right now, you're at that very beginning part of crypto where they can charge you an arm and a leg in many situations, and they really do. Those margins will eventually erode over 10 years or so. So I think, again, just be aware of that, is that as competition comes up, they'll have to lower that commission essentially, and it may not be such a long-term great investment. But shorter term, I would still be a buyer, $70 to $80 in the near term.
we now take the highs on Netflix, the high on the NASDAQ 100, the high on Tesla, and that's our level to trade against. So right now, that is the high, that is the pivot top until proven otherwise. And so basically what I would do is I'd look to buy pullbacks into major technical support, but just quickly, and then short as we move up towards those levels. If we get above those levels, then as a technician, you have to say, okay, I was wrong, and we're going to go higher. But I'm going to guess, considering the volume, considering what we're seeing in the economic data, I do think that we're very close to a major reversal, and maybe look back on this and saying this was the rally which almost touched all-time highs, and now we're going to head back down. I think October lows will be seen by 2024.
Wow.
I think people have to recognize that, you look at the economic data. The economic data that's been strong has been jobs, which you got to give credit for. But I think jobs directly is related to COVID and how hard it was to find people to work. So employers are very hesitant to fire people because of what they experienced during COVID. Once the economy slips into recession, which I do think end of year, early next year happens, that will start to take over. We're even seeing it in technology. And then you look at things like consumer confidence, which has been strong, but that again is directly related to the stock market. When people see their 401ks spiking, they feel better. They just do. Other than that, factory production numbers, retail sales, it's all been atrocious and going lower. And you also see M2 money supply declining, which has a direct correlation to market action historically. So when M2, when money in the system declines, stock markets usually follow.
Do you have a favorite indicator? Are you a big, do you always look at the RSI or, what have you? Do you have an indicator that you kind of go for?
Yeah, so I use a couple different indicators. I'm not someone who uses like 1,000 indicators, because I find like it's almost like too much information. You end up getting too many mixed signals. So I found my trusted ones, and for instance, like Fibonacci retrace is a good one. I love drawing my own trend lines. I find that like for me, trend line drawing is a very rare thing amongst investors, therefore it works better. I think when you have an indicator that everyone uses, it tends to not work as well, right? So everyone uses the moving averages now, which they still work, but they have a higher failure rate. So I think, again, sticking with that type of stuff, but Fibonacci, anything that occurs naturally in nature, Fibonacci occurs in nature. The petals on a flower are in a Fibonacci sequence. The rings on a tree, if you cut it down, are in a Fibonacci sequence. Stuff that is inherently in society or in nature, it tends to have a bigger impact on us as humans. So I do use that. RSI I do use, but I'm very strict on it because I've been burned so many times. Just because an RSI goes over 70 or even 80 doesn't mean you're going to see a pullback. So I look for I have a rule. It says, don't use it as an indicator. Number one, you got to find more than one indicator for any trade. It has to be like at least two things that are telling you something before you jump on it. And with an RSI, I want at least 14 days above 70 or 7 days above 80 on the RSI before I use it as an indicator. Because heck, in my early years, I'd be like, the RSI just went over 70, let me short it. And then a month later, it's still over 70 and I'm way out of the money.